Despite the turbulent New York session yesterday, the benchmark stock indexes closed with minor changes. The market revealed the overall anxiety about the Fed's interest rates, inflation, and the looming government shutdown. Volatile oil prices added fuel to the fire and worsened market concerns. The session today is going to be a challenge. Macroeconomic data already signals an alarm for risky assets. Analysts do not rule out a drastic change in sentiment later today if Jerome Powell gives a softening signal. Despite higher volatility yesterday, the major stock indexes closed with minor changes. The Dow Jones inched down by 0.2%, the Nasdaq climbed by 0.22%, and the S&P 500 added 0.02% to close at 4,274. The New York pre-market showed confidence in the stock indexes. Wall Street indexes tried to recover for the most of the pre-market, but fresh economic data pushed them down. Futures on the stock indexes shed 0.1 and 0.3%. The S&P is expected to trade in the white into the CAD between 4,220 and 4,300 points. The S&P locked modest success on Wednesday. The index grew by 0.4% and dropped by 0.8% before it recouped losses. The report on durable goods orders released yesterday showed growth in August, setting on machinery rebounded following a decline at the beginning of the third quarter. Minneapolis Federal Reserve President Neil Kashkari was among few Fed policymakers warning against further rate hikes. He said yesterday that the evidence of economic health means that the Fed will have to resort to further monetary tightening. In Washington, the Republican House Speaker Kevin McCarthy rejected a temporary funding bill proposed in the Senate, moving the government closer to its fourth partial shutdown indicate. The potential closure aggravated investors' concern. A surge in crude oil prices to its highest level in a year defaulted the latest blow to weaker global markets. Today, investors' attention was focused on the final estimate of the gross domestic product for the second quarter and weekly unemployment benefit claims, and the revised GDP data confirmed fast economic growth in the second quarter amid the resilient labor market. The gross domestic product expanded by 2.1% secondly last quarter, the Commerce Department reported in the third estimate. The figure matched the forecast, and the GDP rate in the first quarter was upgraded to 2.2% from a 2% in the previous estimate. The U.S. economy is propped up by the strong labor market that encourages considerable growth in wages. Nevertheless, a weekly update on unemployment claims changed the picture. The labor market stays afloat. The number of first-time claims for unemployment benefits grew to 204,000. Economists had projected an increase to 215,000. The fundamental picture of the strong economy and labor market does not show risky assets, so the market response could be subdued. The focal point today is a speech by Jerome Powell. He is due to speak after the opening bell and could be the main catalyst for financial markets. If the Fed's chair drops dovish hints, the market will revive hope. Apart from the rhetoric, Wall Street is interested to find out how the regulator evaluates the economic conditions and complicated political environment, including the looming shutdown, turbulent oil prices, and the lingering strike of the automotive industry employees against General Motors, Stellantis, and Ford. Less important today will be the speeches of Fed policymakers with voting rights. Chicago Fed President Austin Goolsbee and Chairman of the Board of Directors Lisa Cook. To sum up, while the market's reaction to the above development may be harsh, many investors will want to wait for the full picture. As for the currency market, the US dollar is making a highly anticipated retracement. Its index pulled back from the highest level in 10 months, and settled at about 106.30. The instrument is likely to trade in the intraday CAD between 106.00 and 106.80. Today, the US dollar pulled back from the strongest level since November. The greenback's rapid rally pushed the yen to the key level of forex interventions and the euro to an 8-month low. The US dollar index is on a track to be the most impressive one-month growth. The US economy confirmed its strength. The Federal Reserve reiterated its hawkish rhetoric, so the US currency has a fair chance to assert its leadership. The Canadian dollar reinforced on Wednesday, and today it's seeking balance between a pullback in oil prices and the softness in the US dollar. The USD CAD is now trading at around 1.3498 inside the intraday CAD between 1.3480 and 1.3520. The crypto market emerged from hibernation. Popular crypto assets are trading with a high volatility, looking optimistic. Bitcoin gained 1% to trade at $26,500. The price encountered $26,750. The token does not give up its efforts to surpass this level. If successful, Bitcoin will recover to 27,000. The alternative scenario suggests a retreat to 26,000. The global fundamental picture does not encourage the risk-on mood. The standoff between the Securities and Exchange Commission and the crypto industry is still underway. The market welcomed the fact that Chair Gary Gensler was roasted by US lawmakers. The Commission chair was again questioned. Gensler said that Bitcoin did not represent either a security or commodity. Today, the Financial Services Committee criticized Gensler after yesterday's congressional hearing. As head of the commission, Gary Gensler openly ignored Congress on legislation and the legislative requests. Republicans are aiming to bring Gary Gensler to justice, the media report quotes. InstaForex analysts are eager to provide you with the accurate information and ask all your questions. Leave your comments and share our market reviews. So subscribe to the channel and see you online tomorrow.